Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, the markets are not doing well in the last few weeks. If you look at the S&P 500, what you will notice is just for the month, there's a lot more red than green. Okay, there are a couple of companies that clearly have done well, oil companies are doing well, and then some technologies companies have done okay. Now, when you look at the just 1 week, it looks really horrible because a lot of the technology companies, the ones that have been leading the markets, for example, Nvidia, is down about 10%. And a lot of that comes from situation in China and so on, which I'm not going to talk about today, but there is situation going on. I'll discuss that once I have more information on that. And then you've got a couple of other companies that have done, like Pfizer, for example, I think it's now in the 52-week lows. So generally, some of the consumers defensive stocks have done all right. Okay, but this is what I genuinely like. Okay, what I like. Let's look at the year to date first of all. Okay, and the situation is completely different. You can see a lot of the technology companies, the year to date are still high. So when you see the news and you basically everything looks doom and gloom, just remember Microsoft is up 34%, Google is up 53%, and Meta is up 155%, 182% by Nvidia, and so on. And then when you look around the other sectors, they haven't done well. Okay, and this is why I'm not adding any money right now as we speak into the technology sections or my sector of my portfolio, because they have been up so much. Okay, companies like Microsoft is up so much. I haven't actually looked into it. For example, and Palo Alto Networks is actually up quite a bit. Okay, companies like Broadcom is up quite a bit. So I'm not really touching these companies. What I'm trying to do is find value in other places, and that's what I want to show you today. I want to share with you two companies I will be adding to InshaAllah and today, and I will show you. I'm going to do some live buys today, InshaAllah. But when you're buying stocks and so on, just think about the bigger picture. Don't focus on just what's happening just today or yesterday or day before. Things might seem a little bit doom and gloom when you listen to this news and so on, but there are companies that are up so much just this year. And when we look at the S&P 500 and the FTSE 100, which I'm going to show you in a second, you will notice actually we're not really in a bad position, okay, especially for the US stocks. But before we do that, as always, it will be really helpful if you can join us on the Patreon account, if you can like the videos. Liking the videos is as good as actually joining us here, honestly, because then it reaches more brothers and sisters out there. But if you join us, you'll know all the buys and sells that I make regularly. You can have access to the ETF tracker, the stock watch list, okay, the private Discord and so on. And then you will have access to the Sharia compliant investing ebook as well, which is basically a file that I put together to help us, inshallah, make our decisions much easier. One of the reasons the stocks are down so much this couple of days is because the US 10-year treasury is actually up now almost to 5%. What this means is, again, by the way, this is bonds, so it's not halal for us to actually invest in this. But people who are allowed to invest in this, okay, they now looking at this thinking, okay, I can get 5% guaranteed from bonds instead of investing in the stock market, which is very volatile and can be a bit risky. This is guaranteed money. So whether they get the 2-year, 5-year, whatever, they can get guaranteed money. And if they actually worried about the recession coming up and so on, then it's easier for them to actually invest in a bond, knowing that if a recession comes and so on, the yield might still go up. They might actually make more money having a treasury yield, basically the treasury note instead of owning basically high flying stocks or whatever. So this is the reason why the market has been down, of course, as well as inflation is still up, recession might be coming up. The Fed might say basically they might want to increase again. The UK exactly doing the same thing, more or less. So there are a lot of doom and gloom when you listen to the news. Okay, but remember what I just said. Focusing on the long-term plan, you will be better off doing that than actually worrying about what's happening in the markets. Now, if you look at the FTSE 100, okay, which is basically 100 biggest companies in the United Kingdom, okay, year to date is flat about just 2%. So basically about not flat, but minus 2% this year. Now, if you look at just the last 5 days, is about 2.5%. And just for the months, about 3.5%. And for the 6 months, is about almost 6.5% down. So the FTSE is actually down quite a bit. So there might be some value in that. So we just need to look into it. But the FTSE, unfortunately, for the last 5 years, and this is why you really have to be careful. And when you see my portfolio, you will see a lot of the companies that I own are US-based companies for this reason. 5 years is only up 6.5%, 6.6% for the last 5 years. Just 6%, let's call it even 7% return in the last 5 years. That's absolutely ridiculous, okay? And this is the reason why I actually don't own a lot of UK stocks. Of course, there are some great ones, and that's the ones that I try to invest. I try to leave the small ones out there alone, because I don't know what the future holds and so on for some of these companies, and it's very hard to find a lot of information about them anyway. So that is basically what I want to share with you with the FTSE 100. Now, if you look at the S&P 500, right, a year to date is up about almost 11%. Last 5 days, on the other hand, it's just down about 2.5%. And then when you look at basically for the 1 month, about 3, let's call it 4% down. 6 months is up. Let's look at the last 5 years, and you can now compare the two. 60% up, and we saw already the other one was 6%. This is 60% up basically in the last 5 years. Of course, because they have all the high-flying companies and all that, whereas the FTSE is full of companies that's basically service-based, and tobaccos and oil companies, and all sorts of companies that industries that are not really doing well, whereas this one is full of technology companies. So I understand that. Even if you look at the Dow Jones, and I'm not just comparing, but I'm just saying, it's good to know these things, right? A year to date, they basically is almost flat. Last 6 months is down for about 1.5%, 3.5% for the month down, and then almost 2% down in the last 5 days. But when you look at the 5 years, again, 35% up in the last 5 years. So although we basically thinking about, oh, this is happening, whatever, if you're holding onto your stock for the last 5 years and you had imagined a lot of the stocks in here, you'll be up right now about 30-40%, which is quite nice, 35% or more, which is quite nice. Now, when we look at the QQQ, this is where things change. A year to date, this is up 34%. 6 months, 12%. The 1 month is actually down about 2.5%, 3% down this week. When you look at the last 5 years, 113%. Why? Because this is full of high-flying companies that have been around not long, okay? They are, technology companies, majority of them, pharmaceutical companies and so on. And that's why this sector, or this QQQ, which is the NASDAQ 100, is actually doing quite well. Okay, so I wouldn't worry too much about what's happening right now. I'll focus on the long-term plan, as I always said to you. And for that reason, I'm buying more stocks as I go along. And what I'm trying to do in the next few weeks, I'm actually allocating more money, okay, to the portfolio, because I realized I've done some calculations. I feel like I need to add more every single week or single month in order to actually maximize my ISA account. So, and right now is actually a good time to buy a lot of stocks. So that's what I'm going to do. And I'll let you know, inshallah, as always. I'll update you on the Discord, and I'll update you when I do the portfolio updates. Now, so I'm currently updating my watch list to include a lot of the stocks that I own and the prices that I'm willing to pay for them. So I'll share that with you guys soon, inshallah. I'm adding, like I said, more money to the portfolio. I'm focusing on quality companies. And what I mean by that is I'm looking for companies that have a, number one, have a moat, paying good dividends. They have a revenue that's still growing, and despite whether we get into recession or whatever, these companies will be absolutely fine, and they're not going to be bankrupt or whatever. Okay, that's the kind of things that I'm looking for. There's a lot more, of course, but I'm kind of summarizing what I'm looking for. So what I would now want to do is show you the companies, two companies that I want to add to today, and I will buy some more stocks. Okay, the first one is S&P Global. This is probably one of the best companies that I own in this portfolio, and I wish that I bought more when it was actually trading way lower than where it is right now. So this company deals with a lot of the credit ratings, for example, benchmarks, analytics, okay, workflow solutions in the global capitals, the commodities, the automated markets, and so on. It has so basically in terms of they work with governments, they work with companies, and so on. So it's their revenue, it looks like it's heading absolutely the right direction. in the next couple of years. When you look at the EPS, for example, yearly, and you take out the estimates, you can see we had a little bit of decline, but when you add it again, you can see now it's actually going to bounce back in the next couple of years. If you look at the ratings, okay, if we go to now ratings, what you will notice is actually a strong buy from these guys here and Wall Street, and a buy from Seeking Alpha analyst, and Quant is actually staying almost there. Quant is the system that you basically Seeking Alpha uses, and so on. And as you can see here, they have 14 strong buys. Okay, they have 8 buys and 2 holds and no sales whatsoever, and their price target is $438, and which is about 25% upside from where it is right now. If you look at the Morningstar, it's more or less not the same, but at least 5% right now discounted. It's 3 stars right now. Okay, it has a wide economic mode, and their fair value price is $375 per share, which is basically where the stock is more or less right now. Okay, so it's in that fair value territory. So you can see it's 3 stars, 4 stars means basically it's undervalued, and 5 stars means it's really undervalued, and 1 is of course more basically expensive. Now, if you look at, for example, even if you look at simply Wall Street, simply safe dividend, is actually looks undervalued. Okay, so because of the 5-year, the average there. And then if you look at even tip rank, is actually also a strong buy, 27% upside from where it is, $447 per share right now. So like I said at the beginning, I do like the company. I have had it in my portfolio for quite some time, and what I want to do today is add half a share of this company. So I'm going to buy £150 worth of shares of this company. That'll give you just above half a share. And again, if it comes down more in the next few weeks, I will be adding to it, inshallah. Send it to the market, and that should now be changed. Okay, so I should have 12.5 shares. I've got right now 12 shares. What I would like to do is, inshallah, in the long run, I want to make this company at least to be 5% or more of my overall portfolio. And as you can see, that has now changed. I've got 12.5 shares, 12.57 shares of this company. The next one I want to talk about today is, actually, before I show you, I just want to do one more thing. I want to show you the earnings estimates for S&P Global. So as you can see, in terms of EPS, you can see about almost 12%. 15%, and then if you just focus on the first 3, you've got 22 analysts, 22 and the 17, so about again 13.5%. In terms of revenue side of it, you can see it's almost 5%, 7%, 7%, so it's a solid going forward, inshallah. And the next one I want to talk about is Public Storage. This is a REIT. I don't have that many REITs. Well, this is the only REIT that I have in this portfolio, and it's actually done all right. Like, it's down quite a bit since I bought it. I think I bought it when it was maybe overpriced, maybe it was trading higher than where it should be, but I'm down quite a bit right now, and I'll show you that in a second. As you can see, a year to date, in fact, is down about 7%. For the 1 year, it's about 12%. For the 6 months, it's down about 11%. Okay, so when we look at the ratings from this for this company, as you can see here on this side, Quant is actually saying it's a buy, Wall Street is saying it's a buy, Seeking Alpha analyst is basically saying it's right now maybe a hold. Okay, and as you can see, we've got 6 strong buys, we've got 4 buys, and we have 6 holders at the moment. And when you look at this, it's about $312 per share, 22% basically upside from where we are right now. Now, if we look at the earnings estimates for going forward for this company, again, 5%, 4%, 4.5%, and so on. And then when you look at the revenue side of it, 6%, let's call it 7%, 4%, 5%. So again, it's a solid when you look at from that side of things. And of course, the dividends are absolutely solid as well. We've got 4 stars from Morningstar, and they're saying it's about 18% discounted right now, and their price range is $317 per share. If we look at this as well, okay, maybe undervalued at the moment. Okay, with the dividend yield of 37% above its 5-year average, so it looks like it's actually undervalued. So what they were doing is they use the 5-year average, which is basically 3.44. That's the 5-year average, and if the dividend yield is higher, okay, then basically the 5-year average, then that means basically the stock is undervalued. If it's lower, then that means it's undervalued. Basically, that's what they basically do to check that. So it looks like it's basically based on that, it's actually undervalued. And these guys are saying is a moderate buy, $316 per share, and 23% upside from where we are now. Public storage, like I said, I'm down about 15% right now. I have been buying it here and there wherever I get chance, and that's exactly what I'm going to do today, because I do feel like for the long run this company will be absolutely fantastic to hold, and the dividend is good. Of course, the dividend is not basically solid in terms of, you know, the growth side of it, but they do pay quite nice dividend, and because they're REIT, of course they have to pay that dividend. So I'm gonna buy £150 share basically, which gives me 0.7 shares of this company. I already have 15.1, sending that to the market, so that should now be updated straight away. As you can see, I now own 15.8 shares. And again, all of these things, the reasons I'm doing this is just to kind of be transparent, show you guys every single week I'm trying to add minimum of £300, if not more, going forward, inshallah. And as the markets come down, there are a few other companies that I will be talking about soon. ASML is another one that I need to talk about soon, inshallah. There are a couple of other companies. Home Depot is now coming back down to a territory that I think is attractive. J&J is now basically lower than my average, which is my average is $159 per share, and J&J is now $153 per share. I'm only up about this much because the FX impact right now, otherwise I would be down. So because of this, the FX impact, I would be down otherwise. So again, another great company. I would love to buy more, 7 more shares and so on. But yeah, so there's a lot of company. Medtronic has actually been down quite a bit. So I would be looking again in my portfolio, doing my watch list again. So I've got the watch list ready. I just need to basically update it, inshallah. If you want access to the watch list that I use, okay, which looks like basically like this here, okay, you should be able to access that through here, okay, inshallah. Let me know if you have any questions, and as always, please, if you can join us here, that would be really helpful. If you can't, then of course like the video, subscribe to the channel. There's about 50, I think more than 50 people, 50% of the people that watch the videos are not subscribed to the channel, which is absolutely crazy. So if you are one of those people, please help us by, you know, subscribing to the channel, because it makes a huge difference to all of us, inshallah. And as always, I'm going to continue being transparent. I've got a few more videos planned for the next couple of days, inshallah. So stay tuned for that, and don't miss out by subscribing to the channel, inshallah. Have a wonderful day. Assalamu Alaikum.